Welcome to the deep dive. Today, we're going deep on Interarch Building Products,
Okay.
a company that's quietly becoming a big deal in India.
Yeah.
We've got their Q1 and Q2 FY25 earnings called transcripts here,
Right.
and we're going to really pick them apart to figure out how they're doing it.
What's interesting about Interarch is they're all about these pre-engineered buildings.
PEEGs.
PEEBs. Yeah, and you might think, so what?
Right. Buildings are buildings.
But PEEBs are really different from how we normally think of construction.
Okay, so let's back up for a sec.
Sure.
For anyone listening,
Yeah.
what exactly are PBOCs? And why should we care?
Well, imagine like a huge factory popping up practically overnight.
Okay.
That's the magic of PEEBs.
Okay.
See, with
Yeah.
normal construction, it's all done bit by bit right there on the site.
Right.
But PEEBs, they're designed and made off-site, then shipped as like a giant kit.
Oh, so it's more like an assembly line than a construction site.
Exactly. And Interarch, they're the masters of this whole process. They handle everything, design, engineering, manufacturing, even putting it all together.
Wow.
And they deliver the whole thing with a set price and a guaranteed finish date.
So it's way faster.
Way faster, way more efficient, which is huge in a place like India that's growing so fast.
That makes sense. But how does this make Interarch stand out? I mean, there's got to be tons of construction companies.
That's the thing. Arvind Nanda, their managing director, he says they're closer to like capital goods than regular construction.
Interesting.
It's because of how they do things. They're more of a partner to their clients.
Oh, so it's not just, here's your building, see ya.
Nope. Involved from the start, making sure every detail is exactly right.
So who are these clients? Anyone and everyone.
Pretty much. That's the cool part of Interarch's model.
Okay.
They're what you call industry agnostic.
Meaning?
They build for anyone: Amazon warehouses, solar farms, car factories, data centers.
Yeah.
Even built stuff for India's space program.
Wow.
This means they're not stuck relying on just one industry doing well.
Smart.
Yeah.
Especially with how much private investment is happening in India right now.
Right. All those businesses building new facilities, that's good news for Interarch.
They're in the perfect spot to ride that wave.
Exactly. And because they can build for anyone, they've got an edge in the booming sectors.
Like what?
Renewables data centers.
Yeah.
Think about it. They could be building the factories that make electric car parts, solar panels.
The foundation of India's future.
Exactly.
Pretty amazing.
Okay.
Okay, but let's get down to brass tacks.
Sure.
Steel's a huge part of their buildings, right? And steel prices are all over the place.
Yeah.
How do they deal with that? That's got to be a headache.
They've actually got a really clever way of handling it.
Okay, I'm listening.
First, they use a mix of fixed price and variable price contracts.
So they're not just stuck eating the price changes.
Right. They can pass some of it on to clients, and if prices drop, they benefit too.
Clever. What else?
They also keep a strategic steel inventory, and they lock in future supplies at fixed prices.
So they're kind of hedging their bets.
Wow. Exactly, making sure a sudden price spike doesn't catch them off guard.
That's smart. Okay, so they're managing the steel problem.
Yeah.
But can they actually keep up with demand? India's growing all these different industries. They're ambitious.
Well, they are taking steps to make sure they can handle it.
Like what?
Expanding capacity aggressively. They've got new plants coming up in Andhra Pradesh and Gujarat.
So they're putting their money where their mouth is.
They want to stay ahead of the curve, make sure they can meet those big growth goals.
Makes sense. But how's this all playing out in their actual financials? That's what these earnings calls are for, right?
And the news is good.
Oh.
Both Q1 and Q2 of FY25 Interarch delivered double-digit growth.
In what?
Revenue EBITDA, which is earnings before all the fancy stuff, and profit after tax.
So they're doing well across the board.
They are. But what I found interesting was their volume growth is actually beating their revenue growth.
What does that mean?
It goes back to their steel strategy. They're selling more buildings, but revenue's growing a bit slower. Means they're getting better at using steel more efficiently, making more with less.
That's good for profits, right?
Especially if steel prices go up again.
So it's not just growth, it's smart growth.
Exactly.
This is fascinating. But let's zoom out a little. What does all this tell us about Interarch's place in the bigger picture of India's construction industry? They're not operating in a vacuum.
Nope.
To really get their potential,
Yeah.
we need to look at the bigger picture.
The context.
What's happening in India's construction industry overall?
Yeah, you gotta understand that to really get Interarch's story.
So paint me a picture.
Okay.
What's driving this construction boom in India?
Well, for one, India is urbanizing like crazy.
Meaning?
Millions of people moving to cities every year.
Wow.
Creates huge demand, housing, commercial spaces, infrastructure, the whole shebang.
And the government's pushing infrastructure development too, right?
Huge push. They've got these ambitious programs to upgrade everything, roads, railways, airports, you name it.
And all that needs buildings, right?
Yeah,
More business for construction companies.
you got it. But it's not just about how MUCH they're building, it's also about what they're building.
Oh, how so?
More and more demand for sustainable buildings, energy efficient ones.
Makes sense with climate change and energy costs going up.
Exactly. And that plays right into Interarch's strength.
Right. They're all about energy-efficient designs and sustainable materials.
They're in a great position to ride that wave.
So we've got urbanization, infrastructure, sustainability. What else?
Technology.
The construction industry is getting a tech makeover.
Oh, yeah. Like what?
Think building information modeling, 3D printing, even drone stuff that can make construction faster and better.
So it's not just bricks and mortar anymore.
Nope. It's about using tech to build smarter.
And Interarch is investing in this stuff too, right?
Absolutely. Remember that fancy design software we talked about?
That's them staying ahead of the curve.
Okay, so urbanization infrastructure, sustainability technology, all pushing growth in Indian construction.
It's a lot.
But it can't all be smooth sailing. What are some of the challenges companies like Interarch face?
Big one is the shortage of skilled labor.
Really? I thought India had a huge workforce.
They do. But finding enough people with the right skills for modern construction, especially for PEBs, it's tough.
I guess PEBs need a different kind of skill set than regular construction.
Right. It's more about precision engineering and assembly, less about laying bricks.
So Interarch needs to train people up.
It's crucial. They've talked about it in their earnings calls. Big focus on training and keeping skilled workers.
Makes sense. So it's not just building factories, it's building a skilled workforce too.
Exactly.
What other hurdles are there?
Regulations. The Indian construction industry's got a lot of them.
Oh, bureaucracy.
Getting permits and approvals can take forever, lots of red tape,
And that means delays and costs going up.
which can hurt profits for sure.
But Interarch's been around a while, right?
Decades, they've built up the relationships and know how to navigate that system.
That's got to be a big advantage.
Huge one.
Okay, so skilled labor regulations, what else?
Financing can be tough, especially for smaller companies.
How so?
Big construction projects need a lot of money up front.
Right.
Getting that funding can be tricky.
That's interesting because Interarch is debt-free, right?
Yep. Seems like they did that on purpose to avoid this exact problem.
Smart move. So they've got the money to grow without relying on loans.
Exactly. They can weather those economic storms while others might struggle.
Okay, so this is a dynamic market, huge opportunities, but big challenges too.
Definitely.
How's Interarch strategically handling all this?
Well, their top priority is clear stay on top in the PE market.
They're already #2 in India, right?
And they're aiming to double their revenue in the next few years.
Ambitious, how are they going to pull that off?
Two ways, organic growth and acquisitions.
So growing from within and buying up other companies.
They're expanding their own capacity with those new plants, but they're also looking to buy smaller PB companies.
Makes sense. Add expertise and reach.
Exactly. A two-pronged attack to dominate the market.
So they're growing their capacity, buying up companies. Why not?
Expanding geographically right now, they're mostly in South and North India,
Uh-huh.
but they want to get bigger in other regions, especially West India, with that new plant in Gujarat.
Smart India is a big country.
Yeah.
Lots of different needs.
Expanding their reach means tapping into new markets and diversifying their revenue.
So they're not just betting on the overall construction market. They're strategically picking their spots within it.
They're playing the game smart.
They're growing, expanding, but are they changing what they offer? Are they just sticking to basic PIBs or are they innovating?
Oh, they're definitely pushing the boundaries.
Oh, like how?
One area they're focused on is multi-story pig construction.
So not just those single-story factories and warehouses anymore.
Exactly. They're developing new systems specifically for taller buildings.
Wow, that opens up a whole new market for them, right?
Huge potential, especially in commercial and residential.
So they're not just building outwards, they're building upwards too.
They're going vertical.
What other innovations are they working on?
New materials and coatings, ways to make their buildings even more sustainable and durable.
It sounds like they're playing the long game here.
Definitely, they're not just chasing quick profits.
And their financials back that up, right?
Right. They're get-free, and they're really good at managing their working capital.
Meaning?
They're turning inventory and receivables into cash really quickly.
So they're not tying up a bunch of money in their operations.
It's all about efficiency and maximizing returns.
And ultimately, it's about making money for their shareholders, right?
That's a goal they're committed to, paying dividends and buying back shares when it makes sense.
So they're not just building a company, they're building a valuable asset.
Exactly.
Okay, so we've got this company in a high-growth market with a smart approach to handling both the good and the bad.
They seem to have a good handle on things.
But what about the bumps in the road? No company has a perfect journey.
True. There's always going to be some unexpected twists and turns.
So in part 3, we'll dig into some of those unexpected moments in Interarch's story. Interarch has had their share of challenges.
No company has a perfect track record.
Remember those dips in their earnings back in 2019 and during COVID?
Right. Those were tough times.
Those weren't just numbers on a spreadsheet. They were real tests for the company.
And they came out stronger. It shows they can adapt and innovate even when things get tough.
Oh, they're resilient.
Yeah.
But here's one more twist that I found really interesting.
Okay, go on.
Their stance on debt. They are completely committed to being debt-free.
That's unusual. Most companies use debt to help them grow.
I know. But Interarch sees debt as a weakness.
Ah.
They think that being financially independent gives them the freedom to make big decisions.
Without having to answer to banks and lenders.
Exactly. They can weather those economic storms we talked about without being tied down by loans.
It's like a core value for them. Financial independence equals strength.
It's definitely a different way of thinking.
Yeah.
Okay, so we've uncovered some surprising twists in Interarch's story.
It hasn't been a straight line to success.
Unexpected beginnings, strategic changes, a unique view on debt. What does all this mean for Interarch's future? What should investors take away from this?
I think the biggest takeaway is that Interarch is more than just a construction company. They really get the Indian market.
They've been around a while.
They're committed to innovation, and they're not afraid to adapt and change.
They're flexible, and they're in it for the long haul.
Exactly. They're focused on building a sustainable business, not just chasing quick wins. And you see that in everything they do.
How so?
Their financial strategy, their commitment to their employees, how they build those strong relationships with their clients.
It's like they're building a company for the future.
Not just for the next quarter or the next year.
And that's something investors should pay attention to.
Absolutely. Anyone looking at India's growth story, Interarch is definitely a company to watch.
They're not just building structures. They're building a future for themselves and for India.
Well said.
And that wraps up our deep dive into Interarch building products. We've covered their business, their history, the challenges they faced, their successes.
It's been quite a journey.
But the most important thing to remember is that Interarch is building more than just buildings. They're building a future. So we encourage you to do your own research. Check out their investor presentations and see what you think. Thanks for joining us on The Deep Dive.